Good afternoon, ladies and gentlemen. Welcome to the 2nd of September weekly market review. So fast, we are into the final leg of 2024 already. And as usual, today I have my handsome guest with me, Mr. Gerald Wong. How are you, Gerald?
Very well. So like you mentioned, we are now down to the last 120 days of the year.
Hmm.
We have so far seen quite a lot of movements in global financial markets, but there are still a few key events that we need to be looking out for over the next few months, including the upcoming Federal Reserve meetings. We have got the US presidential elections coming up. So hopefully we'll be able to discuss some of this with all the viewers today.
Indeed. So the month of August was actually a volatile month. At the beginning of the month, we saw the unwinding of the Japanese yen carry trade. And then we also have the Nvidia earning last week on Wednesday that rocked the market and some surprises over there. So I believe you will share with us more of the details on Nvidia as well today.
Yes, that's right. Okay, so as usual, I will start with the disclaimer that today's sharing is for information purposes only and should not be taken to be financial advice. We have an upcoming Ask SIAS on 25th of September. This is exclusive for members of SIAS. So if you are keen to ask Sunny and I questions during the Ask SIAS session, you can register using this QR code and registration will close on 23rd of September. If you find the weekly market review helpful, do leave us a review on Google. And if you're wondering how you can join SIAS as a member, you can go to this website, sias.org.sg/membership. And if you're a member of SIAS, you'll be able to access various online resources, as well as investor education programs. Okay, so we saw that the S&P 500 had some very modest gains in the past week. But if you're to look at the tech-heavy NASDAQ index, we actually saw a decline by 1%. This is partly driven by the drag by Nvidia. But overall, what this summary is telling me is that we are seeing a rotation out of some of the growth stocks into the value stocks. Okay. One of the ways that we can see this is also if it's a look at the Dow Jones, it was actually up 0.9% in the past week, now at a record high level. And if I were to look at the STI, okay, this is something that might surprise some investors. It actually outperformed the S&P 500 last week with a 1.6% gain. So that is another indication to me that a lot of investors might be switching from some of the growth stocks into more value markets, including the Singapore market, as well as being represented by the Dow Jones Industrial Average. In terms of the macroeconomic data, what we saw in the past week was the core personal consumption expenditure data that came out. Okay, this is widely seen as the inflation metric that the US Federal Reserve actually tracks. And if you're to look at the core PCE inflation, this actually was at the same level as in June. Okay, so that once again provide the investors confidence that the Fed might be able to cut interest rates in the upcoming September meeting. Okay, so no surprises here. We see that it has been at this level of about 2.6% for the past few months. So that has once again provided a further signal that inflation might be under control and the Fed would be then able to start cutting interest rates. Okay, so this is the latest expectations of the Fed interest rate cuts. We are still seeing almost 100% certainty that there will be a rate cut coming through in September. Question is whether is it a 25 basis points or 0.25% cut, or whether is it a 0.5 percentage point cut. Okay. So at this point in time, most investors are still gravitating towards the likelihood of a 0.25 percentage point cut in the upcoming September meeting. Okay, and then we might see another cut in November and December, such that by December this year, we are looking at the Fed benchmark rate being about 100 basis points lower than where it is today. What was also quite surprising in the past week would be for many of us TBill investors, we saw a very sharp fall in the cut-off yield of the 6-month Singapore T-bill. So we are now at 3.13%, which is the lowest level in the past 2 years. Okay, so it has effectively come down from at one point above 4%, now down to 3.13% due to rising expectations of the upcoming Federal Reserve interest rate cut. In terms of how the STI performed, earlier we saw that it actually outperformed the US markets in the past week. We saw quite a number of stocks that actually had significant gains, including Singtel up 6.5% to a multi-year high. We also saw some of the REITs starting to have a bounce with the fall in the government bond yields as well as the T-bill yield. Okay, so one of the top gainers in the STI in the past week was Papertree Pan Asia Commercial Trust, which was up by 3.8%. But I also see that quite a number of other REITs have had a bounce in the past week. Okay, in terms of the top losers, we saw some stocks with moderate decline. These are some of the Jardine-related names, such as the DFI Retail Group, Jardine Matheson. We also have some of the stocks that have done well year to date, like ST Engineering, Yangtze Shipbuilding, having a bit of profit taking, with slight losses of 1% in the past week. Okay, what many investors might be interested in would be Nvidia earnings. It was something that moved the entire US market, as seen in the NASDAQ decline in the last week. And as we see from this chart, from the time before the earnings till the intraday low, there was about a 10% decline in Nvidia share price. So what we'll do is try to understand what came out from the earnings and what are some of the concerns that investors might have. Okay, so first and foremost, we look at the revenue across the different segments. This is something that investors understand to take a look at how the revenue growth has been tracking and whether the explosive growth in artificial intelligence is actually translating to revenue growth for the company. Okay, so we look at the Q2 fiscal year 25, which is the latest quarterly earnings. And what we see here is that the revenue was at 30 billion US dollars in that one quarter. This number was actually above market estimates. So a lot of the growth is actually driven by the data center revenue, where it reached 26.3 billion in the most recent quarter. Okay, if I were to compare that to just 1 year ago, in Q2 fiscal year 24, the data center revenue was just at 10 billion. Okay, so it's more than doubled. And likewise, for the group revenue, it's also more than doubled from 13.5 billion to above 30 billion. Okay, so with that, if you're to look at the year-to-date revenue, it's already close to the full year FY24 revenue. In the past fiscal year, they generate 61 billion of revenue. But as we can see from the first 2 quarters of this fiscal year alone, the company has already generated 56 billion of revenue. Okay. If you're to try to understand where the breakdown of the revenue is, so a big part of Nvidia's revenue is now driven by the data center segment, which is where a lot of the AI chips is being supplied into. So we see that in year-to-date FY25, with the explosive growth in the data center revenue, it now represents 87% of the group revenue, while gaming is at about 10%. And then you've got some of the other smaller segments, let's say automotive business, that make up the rest. Okay, so this is effectively the 4 businesses. So I mentioned earlier that the data center business is what makes up 78%. of the FY24 revenue, and that actually has a 5-year compounded annual growth rate of 75%. Okay, so this is the segment that is growing most quickly. The other segments are growing as well. So if you look at gaming and automotive, having a 5-year CAGR of about 11%, those are decent growth rate, but definitely not as much as your data center segment. Okay, so like I mentioned, this is where your GPU and other AI related equipment is actually being supplied into and driving the very strong growth in this particular segment. Okay, so as you can see here, for the data center segment, the year-to-date FY25 revenue has already surpassed what they achieved for the whole of the previous fiscal year. So that effectively would represent the strong growth within this particular segment. Okay, the other positive would be if you to look at the gross profit margin of Nvidia, that has actually increased. So with the higher revenue, they've been able to book a higher margin as well, which in the first half of the fiscal year 25 is at 77% versus 74% for the full year of FY24. Okay, if you look 1 year back in FY23, the gross margin was at 59%. So we have seen a significant growth in the gross profit together with the growth in revenue. Okay, so with that, Nvidia has been able to generate a very sizable free cash flow. Once again, in the first 6 months of this fiscal year, that is already $28 billion of free cash flow. Okay, so this is actually a very sizable amount of money. And if you to compare that with FY24, once again, that has surpassed the entire free cash flow that they generated in the previous fiscal year. Okay, for the investors who are wondering, then why did Nvidia share price come down despite the very strong earnings that was reported in the previous quarter? There were two things that might effectively have disappointed investors, given that expectations were fairly high going into the earnings. And we have seen Nvidia share price actually going up very significantly so far this year. Okay, so one of the key developments that we need to keep a lookout for is the launch of the Blackwell chip. Okay, so this is the key development that many investors are keeping a lookout for. Currently, we are shipping the Hopper model, okay, which is already way more advanced than the previous chips. But for the Blackwell chip, it can effectively process at a much faster pace compared to the Hopper chip. And this is something that investors are keeping a very close lookout for, as it might further accelerate the developments in the AI sector. Okay, but at this point in time, there are concerns that due to some manufacturing delays, the launch of the Blackwell chip might actually be delayed. And that is one of the reasons that actually led to the fall in Nvidia share price after the earnings. Okay, the other point that I would like to highlight is Nvidia also gave their forecast for the coming quarter revenue. Okay, so as a reminder, we saw that the revenue in the past quarter was at $30 billion US. In terms of the guidance that they have provided for the upcoming quarter, they're expecting it to be close to $32.5 billion US. So while that was in line with what the market was expecting, we see that it is actually it is below the upper end of the range amongst what some analysts actually expected. So in the past few quarters, Nvidia has smashed these estimates, but now we see that they are no longer able to handily beat expectations in the revenue guidance. So I guess that is another factor that has actually tempered the expectations of investors and led to the correction in the share price after the earnings. Okay, so if you look at the upcoming quarter, if they were to deliver 32.5 billion of revenue, we also see a slowdown in the Q-on-Q revenue growth rate. Okay, so effectively, if you look at the past few quarters, It has grown from 18 billion to 22 billion to 26 billion and then to 30 billion. And if you're looking at 32.5 billion in the upcoming quarter, that represents a slight slowdown in growth compared to what we have seen over the past few quarters. Okay. So that led to questions around whether AI has peaked and whether Nvidia shares are then overvalued given the slowdown in momentum that we are potentially going to see. Okay, so in terms of what to look out for in the week ahead, this will be a quieter week. We can hopefully get a bit of a breather, given that it's been a fairly busy August. Some of the key things that I'll be keeping a lookout for, we have the opening of the next Singapore savings bond applications, as well as the US non-farm payroll data that will be coming up on Friday, which is the last set of US non-farm payroll data before we go into the September Fed meeting. Okay, so with that, I hand over to Sunny, who will actually provide us with the latest technical analysis. Sunny, over to you.
Hey, thanks, Gerald, for that insightful sharing and to help us decipher how come the Nvidia share price had a bit of a pullback despite a fantastic results. But just to keep you updated as an informed investor, there was also a short seller, Heidelberg Research, publishing a report on Supermicro Computer, SMCI. So the stock also actually fell quite a bit. That could also have some implication because this is one of the customers of Nvidia as well. So, but we don't comment on rumors in the market, but we just want to keep you informed to let you know what is happening in the market. So, since we are talking about Nvidia, I will start with the US markets. So I give you a bit of my opinion on what happened to the Nvidia stock price. I believe before the results, the market actually front running the valuation of Nvidia itself. And once the result comes out, we can see that the growth rate may be slowing down, and hence going forward, investors might be valuing Nvidia as per what they are valuing with the other big tech stock as well. Hence, there's a bit of retracement on the Nvidia stock price. So that is my take on Nvidia and what I see going forward for Nvidia stock prices. So we had some good news on the Dow Jones Index. Firstly, you can see that the past two trading session on Thursday and Friday, we did actually had a new all-time high for the Dow Jones Index, which is at 41,585. That is the new all-time high. We also managed to close and have a record close on Friday into the final minutes of the trading US session, and that gives us a record close as well. So you can see that the Dow Jones Index actually rose 228 points last Friday, or 0.55%. We are now at an all-time high for the Dow Jones Index already. So what we are looking at next, the guidance, I think we can look at where the indicator is telling us. So first thing first, we can see that there's a pickup of a momentum from the MACD histogram last Friday. So that means that this is a positive sign along with the trajectory of the MACD line and the signal line. It is still telling us that likely the trajectory of the Dow Jones Index is likely to continue upwards. And that also means that the next resistance could be the upper bound of the Bollinger Band that you're looking at right now, the black color line, which is at 42,149 points. But I don't want to be too optimistic. Let's just put the psychological handle of 42,000 as the next resistance level. Okay. On the RSI, we also see a healthy reading of 66 points last Friday, which is above the 14 days moving average of 60 points. So we still have some gap before we touch the 70-point overbought mark. And the highest level was the previous all-time high that we saw somewhere in July. And the RSI actually hit a level of 83 points. So definitely, once we touch the 70-point overbought mark, some resistance or retracement could come in terms of the movement of the Dow Jones Index. But for now, overall, both of the indicators are still telling us that it's a positive sign. We can still trend up higher, about another 500 points towards the 42,000 handle before we reassess the situation again. And I hope to give you the update next Monday. Okay. Next, let's move to the broader index S&P 500. So I managed to draw a a measurement of the distance away from the all-time high for the S&P 500 in April. We are now just about 21 points or just 0.38%, less than 0.5% away from the all-time high. So as me and Gerald discussed last week, I think this should not be a problem. We should be able to see a new all-time high on the S&P 500 as well, catching up with the Dow Jones index. And that could come in the form of the non-farm payroll data this week, this Friday. It could be a catalyst. And of course, we are also looking towards the middle of the month, the rate cut decision that could provide another catalyst for the S&P 500 as well. So looking at S&P 500, definitely if you look at the past few trading sessions, past 5, 6, 7 trading sessions, the momentum has been, the uptrend momentum, I would say that we see in August is starting to subside and starting to consolidate into a holding pattern. So I believe this holding pattern is very much related to the data that's coming in this week, the non-farm payroll data, which I believe will likely be something that the market will be very interested in and could also have an impact on the rate cut decision as well. Okay, so the RSI indicator, you can see that the reading at 61 is still a healthy positive reading, 9 points away from the 70 point overbought mark. So we still have some gap that we can see that the momentum can move up further, and hence the opinion that we are likely going to see the S&P 500 challenging the all-time high in July at 5,669 points, which is about 21 points away from what we are seeing right now. Okay, lastly, the lagger of among the three indices in August, that is the NASDAQ Composite Index, rocked by the Nvidia earnings. So you can see from the indicators here, the uptrend momentum that we see in August has been subsiding quite a bit compared to the other two major US indices. Compared to the all-time high that we see in July, we are about 5% away, 5.4% away, or about 900 points away at the high of 18,671 points. We are currently at 17,713 points. Okay, so MACD is telling us that momentum is sliding, and the RSI is having a weaker reading. Okay, just 4 points above the 50-point neutral mark. So momentum is not very strong now in the NASDAQ Composite Index, and that could explain the reason why the NASDAQ is the lagger for the month of August compared with the other two US indices. Okay, next, let us move back to the STI index. So Gerald just now mentioned that we saw last week STI index gain 1.6%. So we are continuing the recovery as we move back towards the all-time high on 15 July for the Straits Times Index. So we are now about 56 points or 1.6%. It's fluctuating right now because it's on the Monday morning that we are doing this. But on the Monday morning, we can see that STI is up almost 0.5% or 16 points. So we are about 1.6% or 56 points away from the all-time high. My personal opinion will also be we have a very good chance of challenging or testing the all-time high that we saw on 15 July at 3,509 points. So the momentum reading on the MACD indicator is looking very positive. The past two trading sessions, last Friday and today, this morning on Monday, is showing that the uptrend momentum is actually accelerating upwards with a higher MACD reading compared to the previous trading session or the past few trading sessions, I would say, for the last week. The RSI is also looking very strong at the 65-point readings, and it's quite a distance away from the 14 days moving average, and of course the 50-point neutral mark as well. So the RSI still had got some room to move up further towards the 70-point mark, which is the overbought level, and that could come in when the index retests the all-time high again at 3,509 points. So we are looking very positive now, although we have a volatile month in the month of August with the Japanese unwinding trade, and then we have the Fed telling us that the time has come for interest rate to be reduced, and that may happen in the middle of September. And of course, the last week of August dropped by Nvidia. There's a bit of worry, and investors may start to flock back into the Singapore index to start to look for yield instead of the risk associated with the growth stock in US. So these are my takes for this week roundup on the technical side of things and my perspective. Anything we should look out for, Gerald?
I think this is a quieter week. We have a bit of a breather after the very volatile August. So the few key things that I'll be keeping a lookout for will really be around the US jobs data. That will provide investors with further confirmation as to whether we'll see the US Federal Reserve cutting interest rates later this month.
Yes, fully agree with you. So the non-farm payroll data, the CPI data, and then the rate decision in September this month, these are the key things. These are the macroeconomic things that we are looking out for that we will see will likely move the market. And we hope to update everyone as we go along in the weekly market review. So I'd like to thank everyone for your time today, and we will see you again next week on Monday in the next weekly market review. Goodbye.
Thank you.